Everyone has to live somewhere, and everyone has to invest their money someplace. So what happens when where you live meets up with where your money is invested? Hello, real estate. Hey, welcome back to Big Money Real Estate. I'm Elise Blake. Here's today's daily update. Today I'd like to talk a little bit about insurance, and not your average insurance policy. I want to talk about specialized insurance. I got a comment on our Twitter feed asking me to discuss specialized hurricane coverage in Florida, which can be extremely expensive and confusing to purchase, but it can also be critical, especially if you live on the Gulf Coast, just like earthquake insurance or wildfire insurance can be a smart, if expensive, bet if you live in certain parts of California. My guest today is Mary Comerio, and she has extensive knowledge about specialized insurance policies. She's a professor of the graduate school at UC Berkeley's Department of Architecture, and she's written and researched extensively on the topic of natural disaster loss mitigation. Mary, welcome to Big Money Real Estate.
Good morning.
Good morning. So we are now officially, well, as of June 1st, in the season of crazy weather. Not like we haven't had crazy weather, but we've got hurricanes on the horizon. Over the weekend, disastrous amounts of flooding across Oklahoma and Texas. I mean, people washed away. It's just horrible, horrible stories. And yet many communities are still not participating in with the National Flood Insurance Program because local governments are unwilling to adopt any developmental regulations. In California and Florida, we've got private insurers that don't even want to offer earthquake or hurricane insurance anymore. Why don't you give us an update on where you see things right now?
Well, right now, it's difficult. It's difficult for homeowners. It's difficult for real estate investors. Disaster insurance, the insurance industry in general, has realized how big their risks are in this. It wasn't something that just happens once in a great while, but we're seeing more and more disasters globally. And that pattern has meant that they're a little nervous about offering policies. So the policies are getting more expensive and more difficult to get. And in some states, you can't even get them. Like California, Florida, and Hawaii, you mostly buy earthquake or hurricane insurance through a kind of quasi-governmental organization.
So without the ability to buy private insurance policies, how are homeowners going to cope with something like in New Orleans, when you didn't really have, it wasn't really the hurricane that did New Orleans in, it was complete failure of the technology that was protecting the lower Ninth Ward. How do you protect yourself in an era where sort of big insurance companies don't even think that they can offload to reinsurance companies some of this risk?
Well, it really varies community to community. I mean, for most of the East, flood insurance is available, although, as you say, there are some jurisdictions that don't participate, some local jurisdictions. But you can get it. It's simply, you can get the insurance. It's just expensive. And so I have these three rules about, how you decide whether or not to buy this insurance. The first is, what is your risk? Whether it's earthquakes, how close you are to the fault, what are your soil conditions, hurricanes, where are you on the coast, are you, in a flood zone, etc. Second, what's the condition of your building? What's the condition of your house if it's a house? Is it up to modern, contemporary, and I mean like codes in the last 5 years, not built in 1960s modern, because 1960s modern doesn't do you a whole lot of good. Mm-hmm. Does it have hurricane clips? Is it bolted to the foundation for earthquakes? Those kinds of questions. And third, who owns more, you or the bank? Are you really willing to walk away from this investment? Or are you willing to have some savings that it's going to take for the amount of the deductible to do repairs that are necessary? So those are the kinds of things I think people need to think about. And if you're in a high-risk zone, you need to bite the bullet and buy the insurance.
So what are some prices that, or the way that you see the growth of prices? Because some of the research that we've done for some of our clients shows that disaster coverage, not disaster coverage, but the cost of disasters has risen almost tenfold in the last 10 or 15 years. That's far above any sort of rate of inflation that anybody can imagine. So you're looking at disasters that are costing billions of dollars to fix. It seems as though that will be unaffordable, the kind of policies that you would require as an individual owner or even as a real estate investor, that those just might be unaffordable. You're simply willing to take, you have to be willing to take a risk at that point in time and say, I don't really have $20,000 a year to put towards hurricane insurance, or I don't have $20,000 a year to put towards earthquake insurance. I'm going to self-insure. So how do you make that kind of judgment call?
Well, I think it's a combination of both understanding the risk, understanding when a property is not a good idea. Maybe you shouldn't be investing there. I mean, that's part of it. Is this too high risk a property for your investment profile? Just like some stocks and bonds are too high risk for certain investors. There are properties that are too high risk. And then I think you decide between the mitigation question, how much do I do? I live in probably, in the Bay Area, living in San Francisco. I'm the furthest from both faults where my house is, Hayward and San Andreas. I'm 10 kilometers each away from each of them. So that's as far as you can get in the Bay Area away
Yes.
from a major fault. I'm on solid rock, and I've spent a lot of money on my seismic upgrading of my old house. So I'm pretty convinced that I don't need insurance because I can afford to take care of it. But not everybody, somebody who lives right on the fault line in a slide zone, they need insurance.
Right, and I do believe that insurance is so incredibly helpful. Now, I understand that FEMA, the Federal Emergency Management Administration Agency, has advocated establishing disaster-resistant communities. Can you tell us a little bit about that?
Yes, I think this is a movement that has started really in California, but has grown in a lot of other places. The idea is that the whole community, the city, the jurisdiction, the region, is looking at, the kinds of things that they can do to make them more resilient. So some of that is, investing in redundant water lines or gas line shutoffs or, improvements in infrastructure. In California, we've retrofitted every bridge in the state of California, so we don't expect our bridges to collapse in an earthquake. But it also is about targeting specific subsets of buildings within the community that the community thinks are really important. For San Francisco, that's housing, because housing, it's a dense city. We're surrounded by water on three sides, connected by bridges. If you lose housing, people leave. So we're really focused on retrofitting some highly vulnerable kinds of building types that house a lot of people, large apartment buildings. And that's a citywide goal. And there are laws and regulations, there's some financial assistance. So it's a combination of carrot and stick policies. Los Angeles is looking at a similar kind of approach right now, where they're focusing on both public infrastructure and certain very vulnerable building types. And I think that this is a common approach so that you lessen your potential for loss before the earthquake or hurricane or tornado or whatever happens.
So one final question, because this is, I know, coming up every week or so, I see some sort of new study that says that the polar ice caps are melting, the oceans are rising, and coastal communities are in danger. I think about New York as a place where we have seen the rise and the flooding start to really encroach, depending on what happens with different kinds of hurricanes and storm surges. But there's some real concern that New York City, unless they dam up the river somehow, New York City could be at tremendous risk. Have you been reading about how to make, what is the thinking around making New York a disaster-resistant community?
Well, actually, New York is doing a fantastic job post-Sandy. They have invested a huge amount in the water's edge infrastructure in order to make areas both be, parks and recreation areas, but also places that can take flooding or sea level rise when that happens. And they're doing a really great job on that work. And around the whole edge of Manhattan and the other boroughs. I mean, there's been a huge amount of progress in terms of the planning and the beginning of the implementations on that. I think, we have the same issues in Florida. We have the same issues all along the Eastern Seaboard. So it's not just New York. I mean, New York's a big city, but
Big
it's
city,
not
a lot of people live there.
a lot of people live there. A lot of people live, though, in Florida as
Sure.
well, and right on the water. So those are going to be, though, that kind of planning. There's a lot of examples in Europe, especially in, you know, the places where they're used to floods all the time, Northern Europe. So there's a lot of experience with this out there in the world, and I think a lot of good examples to follow. And New York really jumped on the bandwagon and has been doing a lot of that work.
Well, it's really interesting, and I really appreciate you coming on the show today to talk a little bit about this, Mary.
Well, my pleasure.
Mary Comerio is an architecture professor at the University of California at Berkeley. Thank you for watching this episode of Big Money Real Estate. As always, you can send me your real estate investing questions on Twitter and Facebook, and please share this video all around on social media. The Intentional Investor, How to Be Wildly Successful in Real Estate is my latest series, and you can find that at the WIT Nation store or at thinklinkstore.com. See you next time. I'm Elise Glink.